Hello everyone. So we are here from Group 3. We are going to present thing about securities operation for introduction to capital market week 5. But first thing first, let us introduce ourselves. Me, Novel Ali, and my partner.
Kristani Zaputra.
And I hope you guys can learn from our presentation. Alright. So in this presentation, we're going to talk about what is IPO, how does an IPO work, how do investor evaluate an IPO, and we already bring two example of company that when IPO, and we are going to uh determine which company is better. Yeah. So move on to the first content is what is IPO? IPO is an initial public offering or we can call IPO. Yeah, it's a type of public offering in which shares of a company are sold to investors. It is the first time that a company's stock is offered for sale to the public. IPOs are often issued by companies that are looking to raise capital. The money that is raised from the sale of shares is used to finance the company's operation and growth. And then how does an IPO work? An IPO is a chance for a company to raise money by selling shares of ownership to the public. The company gets the money it needs to grow, and investors get a chance to own a piece of company that they think will do well in the future. IPO happen when a company decides to go public, meaning they want to sell shares of their company on the stock market. The company will work with an investment bank to set a price for the shares and then file paperwork to the Securities and Exchange Commissions, or we can call SEC. Once the IPO is approved, the company will start selling shares to investors, and the shares will be traded on the stock exchange, and the price will fluctuate based on the supply and demand. And how do investor evaluate an IPO? There are several ways to evaluate IPO as an investor. Here are some of the key factors for investor to consider when evaluating an IPO. The first one is business model and industry. Investor need to understand the company's business model, its product or services, and the industry it operates in order to assess the growth potential and competitive landscape of the industry. The second one is competitive landscape. Investor needs to analyze the competitive environment in which the company operates, also to identify key competitors and assess the company's competitive positioning and differentiation. And the third one is financial performance. Investors need to examine the company's revenue growth, profit margin, and net income. Also analyze past financial statement to help assess the company's stability and growth trends. The fourth one is market condition. Investors need to consider the broader market condition and economic environment because IPOs can be influenced by overall market sentiment and volatility. Then last but not least is long-term growth prospect. Investor needs to evaluate company's long-term growth potential involves assessing its competitive advantage, market dynamics, and its ability to adapt to changing condition. And the first example will be explained by my friend Tristan. Yeah, the time is yours.
Okay, so I will be explaining about the first company, which is PT Koka Indonesia. PT Koka General Indonesia is a limited liability company which was founded in 2011 and operates in the field of construction project contracting, mechanical engineering, geotechnical engineering, interior design, and furniture. So the shares offered in this IPO is is around 7 million lots, and then the book building price range is between 128 to 161 rupiah per share. So the potential growth of PT Koka Indonesia, um, PT Koka will reap a maximum of 115.16 billion in fresh funds, and of these funds, around 13.55% or 15 billion will be used for capital expenditure, and around 86.45% will be used for working capital. Thanks. Okay, so we move on to the financial analysis. So the first one is debt to equity ratio. And here we can see that the debt to equity ratio is 0.38, which means that the company has a low risk, as they won't be having a hard time in covering their liabilities. Next. As for the sales growth, we can see that at the end of 2022, PT Koka, they posted a revenue of 182.91 billion, which is an increase of 30.87% compared to 2021, which is a significant increase. And then the profit for the year was recorded at 19.38 billion, or a jump of 75.24%. Okay. The next one is operating margins. As we can see here, throughout the years, the gross profit margin, it increases every year, which indicates that the company is producing profit over and above its costs. And then the increase in net profit margin, that indicates that the company is able to efficiently control its costs, and or provide goods or services at a price significantly higher than its cost. And then the return on equity percentage is at 15.33%, which is considered high, and it indicates that the company is efficiently using its shareholders' equity to generate income. And lastly, the return on assets at 11.08%, which indicates that the company is better at converting its equity financing to profits. The next one is interest coverage ratio. And here we can see that the interest coverage ratio is 103.50. This is also considered high, which indicates that that this company has a higher ability to service debt from operating earnings. Next. And lastly is the price to earnings ratio. So we can calculate the PE ratio by dividing the price per share by the earnings per share. The price per share here is 161 divided by the earnings per share, which is 5.53. And we get the PE ratio of 29.11.
Okay, Tristan, thanks for the explanation. So I will explain to you guys about the second example. So we're going to talk about a company named PT Pulau Subur Tbk, or with PTPS. So in 1981, the company started its business in the field of rubber and corn plantation, as well as animal husbandry and fisheries. The increasing trend in demand for CPO in 2003, the company started planting oil palm seeds on an area of 12.5 hectares. Then the company decided to focus on developing oil palms until now, with a total location permit area of 1,180.39 hectare, a total land area of 1,200 hectare consists of lands with Haiju status of 882 hectare and APH of 30, 332 hectares. And PTPS has shared offered by 450 million shares and book building price range from 199 to 206 rupiah. So the debit ratio from Pulau Super Tbk is 0.40. This indicates that the company has low risk, as they won't be having a hard time covering the reliabilities. So it's pretty much safe, like I would say. Yeah. So the next topic is we're going to talk about sales growth. At 2022, the revenue jumped from 50 billion to 64 billion, which is significant to indicates that they are able to generate profit higher than the previous year. So that's a good sign. And then ROE and ROA, a low ROE percentage, which is shown in the screen, 11.1% indicates that the company inefficiency and may struggle to generate sufficient return to compensate its shareholder for the risk they are taking by investing in the company. And a low ROA, which is 7.9%, indicates that the company has too many assets relative to its level of profitability. In other words, it might have excessive investment in assets that are not generating sufficient returns. Interest coverage ratio. As you guys can see in the screen, interest coverage ratio of PT Pulau Super Tbk is 80.99. A high interest coverage ratio indicates a higher ability to service debt from operating earnings. And lastly, PE ratio. Just like Tristan said from the previous explanation, PE ratio is the ratio for valuing a company that measures its current share price relative to its per share earning. So you guys can see the PE ratio of Pulau Super is 9.76. So yeah. So we're going to conclude from what we just said, and we're going to determine which company is better. Yeah.
Okay. So if I were an investor and I would like to invest in one of these companies, I would choose PT Koka Indonesia. Why? Because as we can see here from the um, PE ratio, PT Koka's PE ratio is higher than PT Pulau Subur, which can indicate two things. The first one is that the company is overvalued, but it can also show that um, that investors are expecting high growth rates in the future. And then the debt to equity ratio, um, the debt to equity ratio of PT Koka is lower than uh, the debt to equity ratio of PT Pulau Subur. It means that PT Koka will have um, will have lower risk, and they won't be having a hard time in covering their liabilities. And then the interest coverage ratio um, is also higher. It it means that the company can pay its interest on its outstanding debt, and then the return on equity is also higher. It shows that PT Koka is more efficient in generating these profits. And then lastly, the return on assets, which is also higher. It indicates that PT Koka uh, is is more profitable in relation to its total assets. Next. Next.
So that's it from us. Hope you guys can learn from this presentation and don't forget to drop the question. So see you guys. Bye.